Hi, I'm Kendra Akers, licensed real estate agent with Morris Realty and Investments. Welcome to my podcast. I wanted to take an opportunity to start a podcast. I have so many clients and buyers and sellers both that have questions as I'm working with them through the process of, anywhere from their mortgage to remodeling to moving. So I just figured I would create this podcast to answer some of those questions and do a Ask the Expert segment. Today, I'm happy to introduce a friend of mine who I've worked with many times over the years, probably over the past 10 years. We have the pleasure of meeting with Rich Lemoyne from Mortgage Financial Group, and he's going to help us answer some questions today about what's going on in the market, the different rates and different programs that are available to us here in Lake and Sumter County. So welcome, Rich. Glad to have you.
Thank you. Thank you for having me.
Well, I know you very well, and I would love for the audience to get to know you very well. So why don't you give us a little history of your personal life?
So started about 16, 17 years ago with Mortgage Financial, got my license, called John Ardito with Mortgage Financial Group, and he said, all right, we'll take you. And he kind of just mentored me through the business, and been in, the only place I've ever been for mortgages. And
well, it's always good to have somebody mentor you, and that creates a relationship, and you just want to stick with them because they've helped you when you didn't know what you were doing. They helped you through that. So.
Absolutely. No, he provided the knowledge and the environment for me to learn and to gain, cut my teeth, so to speak. I got into the business right as 2008 hit and the market crashed. And so
Fun.
Everybody was, panicking, and I thought to myself, this could be a bad deal.
Yeah.
And turned out to be a great deal. Mortgage Financial was very skilled in USDA loans at the time, and they were very popular. And we started growing the business through that time frame when a lot of people were struggling. We were able to grow and been able to keep going since.
So tell us about yourself. Are you married?
I am. I've been married for 21 years. My wife, Judith Ann, and I are lucky to have two children, teenagers, 16 and 13.
God bless you.
Thank you. They keep us on our toes. Ethan, he's a junior at MDCA, and he's into all sorts of things, but baseball is his passion. My daughter Belle, she's in 8th grade at MDCA, and she's into track and soccer now, and dance. And so she's got a full-time schedule. So we just, burn up the roads, taking kids to different places.
Yeah, I love that. Well, we have you here today to pick your brain a little bit and ask the expert. So we want to know what in the world is going on with these rates.
Well, they're
interesting.
They're interesting. So they were going down a little bit, and we had the much anticipated Fed rate cut, and it happened. They cut it 50 basis points.
Yeah, everybody was like, okay, yay, now here it goes. The rates are going to go down, time to buy. Didn't happen.
So what happened was basically they have increased because the Fed rate cut, what the Fed is actually lending that rate on is short-term money. That is more from the Fed to banks. That is not what mortgage rates are predicated upon. The mortgage rates are really predicated more upon the 10-year Treasury note. If you'll follow that historically, as it goes up and down, you'll notice that the mortgage rates go up and down with it. There's other factors that go into play, such as inflation, which obviously inflation's been high. It's come back down a little bit. The environment, the economic environment, unemployment, there's all sorts of things.
Political environment.
Yeah. You also have different things for different people. You have loan level price adjustments. What that means is if you're getting a loan, and what is your credit score? What is your debt to income? Is it a primary home? Is it a secondary home? Is it an investment? Those are different adjustments that affect interest rates also. And so rates are a little bit higher right now. The Fed will meet here shortly, anticipated probably a December cut potentially, but we'll have to just see what that looks like when we get there.
How many phone calls do you get when people hear that there's going to be a rate adjustment through the Fed and they're calling you as soon as it happens. I know I called you.
Yeah.
Several times.
Yeah.
I called you. What's going on? What's going on?
So you get people who are obviously in the process of purchasing their home. They call you and say, hey, is our rate going to be lower now? Or people who are on the fence are like, okay, rates are down, I'm ready to go.
Yeah.
So you have to just talk them through a little bit of that, of what we're looking at and what the anticipation is. And, we follow experts and we kind of go off of their guidelines of what they see is happening in the marketplace and work off of that just to provide the customers with the best knowledge we can.
So just say the rates don't change too much or they even increase over the next, few months to a year. What type of programs or financial assistance or any type of governmental programs, what's available in the mortgage industry right now to kind of help with those,
right,
the inflation and the extra rate, the higher rates? What would you advise someone who's looking to buy right now? What would you advise them to do?
So the first thing is if you're truly interested in pursuing that, is get pre-qualified.
Yeah.
Because the first step is we got to see exactly what we're dealing with. What is your income? What is your credit score? Debt to income? What is your price range? Give you an expectation of what your budget's going to look like at a certain price range, because it may be less or more than what you're anticipating.
Yeah.
To make sure that when you go look at houses that they're you're in your own category, so to speak. So that's the first thing. Then after that, it's what kind of loan program do you work into? Do you work into USDA, which is a zero down loan? Do you work into FHA, 3.5% down loan? Conventional, anywhere from 3%, generally 5% on up. Depends on what we're doing and how your credit score. VA, which is a very popular one right now. A lot of veterans are getting into the market just simply because it's a zero down loan and they get great interest rates.
Yeah.
But there's also other ways to get into the market. So there's down payment assistance programs. Once we get you pre-qualified, we have to look to see what you would qualify for, because there's different programs, and making sure that there is money in those programs. Some of those programs have run out of money here recently. Another thing is there's bank statement loans again. So that's where a self-employed or a business owner who may not have as much income on their taxes, we can use their bank statements, and we use a factor for that. There's debt service loans for investors where the property kind of stands for itself. So there's different options to get into the market if you want to. But again, first thing, let's get you pre-approved, get your documents turned in so we can see what they are, not what you think your income is, especially if you're self-employed or an independent contractor, because you have write-offs and different things like that. So we need to just make sure what your true purchasing power is.
So if you were to meet with somebody who, because I know as an agent, I have a lot of people that contact me and they want to go see a house, but they've not been pre-qualified. They don't know what they can afford. So is there like a checklist or something that your company provides of like steps to take or anything like that, that they would know, hey, I need to make sure that I have all this in line before I even go to look for a home?
Right. So the first thing we do is the client will call and we'll have a brief conversation like, what are we trying to do? What's the goal? Mm-hmm. And then we talk about it, and we talk about the application, what that looks like and what we're looking for on there. And then after the application's done, there is a portal that you can upload your taxes, your driver's license, bank statements, pay stubs, so we can truly get an accurate reflection of what your purchasing power is, not I think I make about this a year. We know what you make. We do a soft pull on your credit, so we have an idea of what that looks like on your debt.
Well, what's the difference between a soft pull and a
hard
pull?
Mm-hmm. So the soft pull, we pull one bureau. That's what we do as a company. The advantage to that is it gives us one credit score, so at least we have a guideline of what we're working off. That helps us with loan programs.
Okay.
Then a hard pull is actually when all three are pulled, and it actually affects your credit score. But that's the big one. We will do that once you're under contract.
Okay.
Or if you're wanting to get a full pre-approval all the way through to where, hey, I know I'm buying a house, so we can, but I want to get everything done and so I can close as soon as possible. Some people will say, let's get the full hard pull done, and get all the documents and going through underwriting. So you're basically pre-underwritten to where once you find a house, we can close at a little bit faster pace for you, depending on your time frame.
Well, that leads me to I've had people that have come to me and said I'm pre-approved, and they think that means it's done. I've already been approved. I know I'm going to be able to make it through this process and buy a house. So I've had situations where they've gotten the pre-approval and gotten to the point where it's gone to underwriters, and it came back that they actually weren't able to provide the documentation that they said, or whatever the scenario may be. So what would you say about the difference in that and what happens between the pre-approval and the final approval?
So yes, no, that does happen. That can happen at times. What I would say is the more information that you can disclose and provide gives us a better understanding. So in the beginning, we're getting basically the beginning checklist to get you underwritten. And then we turn you over to an underwriter, and we also turn you over to a program called DU. It's the government system for underwriting. So we follow their guidance that we have to for their guidelines. But then our underwriter has to make sure that everything is being checked, and there's multiple checks and balances for everything that we do. So what I would say is turn in everything. Don't have something in the back of your mind that could be a problem and just hope we're not going to find it. Because it will be
right.
It will be caught.
Right.
And then you'll be 2 weeks, 3 weeks down the road, and you'll be out inspection money, appraisal money, and different things like that. So
yeah,
I would definitely encourage you to provide all that, or just verbalize it like, hey, is this going to be a problem? Give us an idea of what you think could be a problem, so at least we know what we're dealing with.
Okay, so we have a buyer who's gone through the process of getting pre-approved. I'm taking them to look for homes. They found their dream home. So walk us through what that process, what they can expect to happen, and what type of things you'll be asking them at that point.
So the first question comes is, once you have identified the house, is we have a conversation to run through the numbers on that particular house. Okay, what are the taxes? What do we believe the insurance is going to be? So, and then in this environment, what is the interest rate going to be? So we have an idea of their payment to make sure they're comfortable with the cash to close. Okay, if all those things are good, then we will give the pre-approval letter to the agent, which in this case would be you, for you to submit your offer. Once you go through negotiations and everything's accepted, send me the contract. I will put their application for them in, and then they will e-sign all the documents.
You brought up a good point about you'll provide the letter to the agent to put into the offer. So many people don't realize that one of the reasons why us as agents want you to get pre-approved before is because we actually have to either submit a proof of funds or a pre-approval letter before they'll even talk to you or look at the offer. So we have to have that. It's not because we have to have that. It's not because we're being, mean agents or anything like that. It's just part of the process, and it makes sense because you don't want to go through negotiations and then find out the person wasn't even approved in the first place.
No, absolutely. So in the beginning, even going back a couple of steps, obviously have the conversation with you, and if you need a letter, we provide the letter, and then we provide a more detailed letter for the specific property when you submit your offer. So you have the letter the whole time. You know that they are pre-approved going into it.
Yes.
So after they have e-signed their documents and we're moving through, we put them into underwriting almost immediately. That way we know exactly what we're dealing with, if there's any red flags, if there's a problem, if there's something that we did not catch in the beginning, or did DU kick back an issue that was more of a problem. So we do that as fast as we can, get you into underwriting. We have a processor who will email you, contact you. Obviously, I'm always the point of contact. But as we go through there, we all work together to get all the documents turned in. And as we go through, we order the appraisal. And the appraisal basically gives us a value of the property to make sure that we're lending you money on works for the bank. Also, it gives a condition of the property and make sure that there's comparables for the value. So that's what the appraisal does. There's a survey that will be done during the process also, more than likely. And all that is going while we're getting all the documents together to close the mortgage.
So when somebody makes an offer on the home, they typically, this can be negotiated, but typically it's a 10 to 15 day inspection period of that home. So explain to us what fees a buyer would need to pay up front and then what is going to be paid at closing so that they know and understand what is going to be required of them before they even get to the closing table.
Right. So the only thing for like mortgage financial that we will charge you for is the appraisal. We will charge you for the appraisal once it is completed. We don't charge you up front. It is once it is completed, we pay the appraiser because the appraiser is a third-party contractor, does not work for mortgage financial. Yeah. So they're independent, and that's how the value comes in independently. So that's the only fee that mortgage financial. Obviously, there's other fees. So on your end, you will put them through an inspection and probably a WDO for termites and any other test that you have them go through, whether it be septic or well or whatever they're doing.
That all happens during that inspection period.
Correct. So I don't know how much that costs, but if I was guessing, it's several $100s on your end.
I've seen it go anywhere from $400 to $1,500. So it just depends on the square footage of the home, what in-depth tests you're getting or inspections you're getting. So that's a shocker to some people when they're not expecting to have that out-of-pocket expense within the first couple days. And then if they find things, they're out that money, you know? So if that contract falls through, they're out that money. So it's always best to make sure while you're there and you're going to make an offer on the home, you love the home, is to do as much, testing out the water faucets, things like that as you're looking at the home.
Oh, yeah. And the other part of it is that home inspection. It doesn't come to me. I don't review it. But your insurance carrier will want to have that, and that's going to play a role in your insurance rate, which obviously then comes back to the mortgage company because we have to have a mortgage quote during this process to have an idea of what that's going to be for your debt to income. And we bind that the week of closing. So that way it's in place for when you purchase the home.
So we covered the process, we covered the fees. Let's revert back to a little bit of the types of programs because you had mentioned to me that you're a fan of the reverse mortgages. So a lot of people don't really know what that means and what that is. So can you explain that to us a bit?
So what a reverse mortgage is we'll just use an example. You've lived in your house for a period of time. You have built up equity. So let's just say, easy example, the house is worth $400,000 and you owe $100,000. Okay, so you're making your payment along. If you are of age, which is over 62, what they're going to do is they do an appraisal on the property. They also, based upon your age, there's a sliding scale. So the older you are, the less equity you have to have in the property. So if you're 80, you have to have less equity. If you're 65, you're gonna have a little bit more. Yeah, and they determine the number. And if you have enough equity, basically your mortgage will be gone. Or if you owe nothing, you can pull out some money. And there is a mortgage in place. And what that does is a typical mortgage, when you're paying it every month, you're paying, the principal down, you're paying the principal down. It keeps going until you pay it off. In this case, you don't make a monthly payment. It keeps going up. So you can go from 200 on up in this example over a course of a lifetime. It has to be your primary residence. So if you or your spouse, both of you, end up either passing or going to a nursing home or having to move, or you just sell that property, it goes away. But it is your house. The bank doesn't own the house. It's still your house. So the other advantage is it's a no recourse loan. So what that means is the bank isn't coming after your heirs for it. The bank will take that property back if you don't sell it, initially. Yeah. Then
I know that's a big concern.
That is a huge concern because a lot of people want to leave the property to their kids or family members. Right. Part of their retirement, or not retirement, but their death benefit to them, so to speak. So that's kind of, there's also another program, reverse purchase, to where basically you put enough money down to meet the equity point of a reverse mortgage, and then you don't have to make a mortgage payment after that. In all of those programs, you still are required to maintain your taxes and your homeowner's insurance and if there's an HOA. You have to continue to pay those, but you just won't make the mortgage payment part of it.
What do you find is there a pretty much a standard program that is used the most? Is that conventional, or do you find that it's a good variety just based on the individual across the board?
I think it's gone from different phases. Like I said, in about 2008, there was a lot of USDA.
Yeah.
As the homes have increased in value, FHA's become very prevalent, and so has conventional. So I would say that those two are your programs. So you're looking from 3.5% down to 5% as a rule on up with conventional. The difference is, the main difference is credit score. The higher the credit score, the more likely you probably will go conventional. But FHA is a great program that's sponsored through the government.
So with a credit score, is there like a certain level that you would have to be for any of these programs that you have, or is it a moving scale?
So your rule of thumb is basically you would want to be, the higher you are, the better you are going to be for conventional. So anything above 680, that's kind of where we start to look for conventional. 680, 700, 720.
Financeable at 680.
Correct, for conventional.
Okay.
But you can go down below 680 to 660, 640, 620, FHA, no problem, and on down. The further your score gets away from, say, 660, the more scrutiny, doesn't matter what loan program you're going to be in, but the more scrutiny your financials are going to be evaluated to make sure that there can be repayment.
Makes sense. The banks want their money back.
They're in the business of that.
Yeah. Okay, so we've gotten through the whole process. The buyer has provided everything they needed. Underwriting's happy. What are the magic words?
Clear to close, CTC.
And that is the magic words, because once you hear that and once I hear that, then we share with the buyer, and then everybody's happy.
Everybody's happy.
We're on our way to homeownership at that point.
Absolutely. So the big thing on that is you're clear to close. So usually within basically 1 to 4 days as a rule, the closing will happen at that point. And, you'll go to the title company and sign a few documents. And at that point, keys are exchanged.
Now they've even gotten it to where you don't have to go to the closing agent. You can do everything right from your home. So depends on what you prefer.
Yeah, no, there's definitely a hybrid package where you sign the majority of it. No, you still have to wet sign a few documents, but the hybrid package definitely sped up the process for sure.
Yeah, I didn't know it was called that.
Yeah.
Okay, well, so all of this sounds very scary. It's like, a huge endeavor that you're having obstacle to overcome, but truly it's not. And that's why the buyers have you and they have me to help with the process and make it a smooth process. And it can actually be very enjoyable. So I hope that as I'm working with my buyers, that I am able to make the whole, from start to finish, the whole process is just a joy and it's a pleasure, and we have a lot of fun with it, because most people only do it once or twice in a lifetime. So my goal is always to make that fun. And I know working with you over the years, we've got a lot of laughs, had a lot of laughs over it. So it's not as scary as it sounds.
No, it's not that scary. And the main part of that is the more documents you can turn in up front, the more answers we can get on our end. We can eliminate all the problems in the beginning to help just coast into the finish line to where it's smooth and enjoyable and not as stressful as possible. A lot of people have a lot of anxiety during this, because it is, a stressful event. But the more information we get in the beginning, the better it'll be for everybody, and it doesn't have to be stressful.
So there you go. Come prepared and it'll all go smoothly.
Absolutely.
Right? So if somebody is looking to buy a home, what is the best way for them to reach you?
I think the best way is just simply to call me. And you can do that at 352-408-5999. That is my cell phone. It is on me basically 24 hours a day. My wife calls it my third hand.
I can vouch for that.
Yeah. So I have it at all times. You can call, you can text, and that way we can, get comfortable with each other, explain the process, because everybody has a unique situation. So that way we can get together, we can talk, get the application to them, and then just work through it that way.
Well, I can tell you from the buyers that I know that have worked with you, they say after it's all said and done, they feel like they gained a friend. So you're doing a great job.
Well, thank you.
Well, Rich, thank you so much for coming in today. And I think that we've been able to provide potential home buyers a good outline of what they can expect and the different programs and different types of loans that are available. So very, very huge benefit to a future home buyer. And I appreciate your time for coming in and sharing everything with us today.
Well, thank you for having me.
All right, that wraps it up for today. Thank you so much for joining us. And if you're looking to purchase your next home, please give me a call.